It's been another week on the slide for the global oil prices. They've now dropped more than 10%. At one point today, they fell below $50 a barrel. They closed just above that. Now, just 6 months ago, they were more than double that. Oil, if you're keeping track, is now at the lowest level since April 2009. And you remember back then, we were deep into the global crash following the collapse of U.S. banks over the subprime mortgage crisis. Now, if you think that's low, here's a bit of perspective that might be helpful. As you can see from the chart behind me, oil prices go up and down all the time. In December of '98, a barrel of oil was less than $10 a barrel. 10 years before that, about the same. And in December of 2008, oil was at $43 a barrel right after the global economic crash. So the current slide has a ways to go if it wants to match that. Now, economies dependent on oil and gas revenues are bracing for a ripple effect. Ginger Vaughn reports from America's unofficial energy capital, Houston.
Here in Texas, the price of regular gas has tumbled to under $1.60 a gallon, or 3.8 liters. Great for consumers, but less so for the state. Oil production has made Texas the world's 14th largest economy, ahead of Spain, Indonesia, and Iran. 3 of the top 10 Fortune 500 companies are oil companies, headquartered here.
First, they're going to cut their capital budget. That means essentially defer some projects which might otherwise have been on the fast burner, and within the shales where the big effect will happen, people will end up, the companies will end up lowering the number of wells they drill per year, just concentrating on the best possible wells.
Since June, the price of West Texas Intermediate crude has been cut in half. Oil companies aren't renewing contracts for drilling off the Texas coast. Here in Houston, that means layoffs. One company, Hercules Offshore, says it will lay off 300 of its employees, a cut that represents 15% of the company's total workforce.
By some estimates, one of these Texas energy jobs has the same purchasing power of 3 non-energy ones.
What we're finding today in the employment side is that the projects that have been already underway, we're continuing to staff for and continuing to hire for. Projects that have not already started or at the very infancy, a lot of those are being put on hold, so that will impact the hiring going into 2015 because we won't be hiring as robustly into projects that are being shelved for a year or two while the oil prices are lower.
The overall U.S. economy may weather the plunge just fine. While some U.S. officials say the average American household will spend around $550 less a year on gas this year than last year, a lot of the spare cash will be spent on shopping and restaurants. It's states like Texas, Oklahoma, and Alaska that'll bear the brunt of slumping oil prices. Ginger Vaughn, CCTV, Houston.